Thank you very much. Let me welcome you to MedZone African Motives. Today we are going to be on Economics Grade 10. Economics Grade 10, whereby we are going to be on Term 2 Revision Paper 1. So we are going to prepare ourselves for the coming term two test that we are going to write. So we are going to prepare ourselves with the question paper which was written in Limpopo province. So that is that. And this paper was written in uh, 2025, mid-year 2025. So that is that. So let us be together from the start of this presentation to the end of it, grade 10s. So without wasting much time, let us attend to instruction section. So here we are on instructions and information, instructions and information. So uh, you are to answer three questions, whereby we have section A, sorry, which is compulsory. Section B, you answer any one of the two questions, but as we are going to attend to all of those questions in section B. Section C, you answer one question of the two questions, like in section B, we are going to answer them all as to fully prepare ourselves for the coming term 2 test that you are going to write. So you can now go through this other instruction for the sake of time. So go through these other instructions. They are very important. Go through them all. So let's quickly attend to question 1, section A. So here we are on section A. Like we have said, section A is compulsory. So it's a must attend question. So this question is all about multiple choice questions, and you are to take 20 minutes on this section, and you're going to get 20 marks for that question. So now let us start with 1.1. As it says, various options are provided as possible answers to the following questions. Choose the correct answer and write the only letter AD to the next question number. That is 1.1.1 to 1.1.5. In the answer book, for example, 1.1.6D. So that is that. So now let us attend to 1.1.1. As it says, the study of the total consumption, production, and exchange of individual households and industries in a country. So we are given this for options, and we are to come up with the correct answer. We are given A, labor economics, B, environmental economics, C, microeconomics, and D, macroeconomics. So now we are to give the correct answer. So the correct answer there is macroeconomics. It's macroeconomics. It's macroeconomics because it has said the study of the total consumption, production, and exchange of individual households and industry in a country. That is macroeconomics. So we know very well that macroeconomics studies the economy as a whole. The economy as a whole. Like, for example, we can talk of inflation, unemployment, economic growth. So that is that. So now let us go to 1.12, whereby it talks about linkage. Linkage in a circular flow model is represented by, we are given exports, earnings, investments, government spending, taxes. So there the correct answer is D, taxes. Linkage in a circular flow model is represented by taxes. So taxes are compulsory payments made to the government. Can talk of value added tax as an example on the goods. So that is that. So now let us move on to 1.13. 1.1 and 3 says involves a subjective value judgment. Then we are given positive statement, realistic statement, normative statement, negative statement. So the correct answer is C, normative statement. Normative statement involves a subjective value judgment. A normative statement expresses an opinion or value judgment. So that is that. For example, the government should reduce taxes. That is an opinion. So that is what we're saying. This is normative statement. Let us move on, good people. Let us move on to 1.14. A negative economic growth of the two consecutive quarters. So we are given a recession, depression, prosperity, recovery. So now we want the correct answer there on 1.14 when you're talking about a negative economic growth for the two consecutive quarters. So now we want the correct answer. So the correct answer there is A. The correct answer is a recession. That is a change at the same time with economic activities. These are indicators that move together with economy. So that is that. So now let us move on to 1.15. The lowest turning point of a business cycle is known as peak, the trough, expansion, contraction. And the correct answer there is B, trough. We know that is the lowest point in the business cycle. That is, for example, when unemployment is very high during a recession. So that is that. So now let us move on, people, let us move on. So now we are on the matching question. We are on matching question 1.2. As it says, choose the description from column B that matches item in column A. Write only the letter A to G next to the question number 1.21 to 1.26 in the answer book. So here are our columns, and this is column A, this is column B. So as it said, choose the description from column B. Descriptions are under column B as well. The items are in column A. So let us attend to this question. As it says, column A, factor market. So we want to know the description in column B that is going to match the factor market. So factor market, as we can go through all of this, we can go through all this and see which description is going to match the factor market. That is that. When you go through all this description, you can see that the correct description that is going to suitably match the factor market is F. F, as it says, it is a place in which the factors of production are sold. That is the factors of production market. So the F is the correct answer. As you know that factor market is a place where labor, land, capital, and entrepreneurs are bought or sold. So that is that. For example, we can talk of labor market where workers sell their skills. So that is a factor market. So now let us come to the free goods. Free goods. So same as factor market, we are going to look at the description that matches this item, free goods. So as you go through them together, you can see that D is a correct description that matches this item, free goods. Have utility, but no exchange value. Have utility, but no exchange value. So these are goods that have usefulness, but no price. These are goods that have usefulness, but no price. For example, we can talk of air. There's no price, but it's very Very useful. So that is why we are saying now the correct answer there is D. Now we have this item which is Keynesian. So the Keynesian, also we are going to look at the description that mentions it, and then you can see that E best match our Keynesian. So E is a correct answer, where it says believes that market is inherently unstable. That is that. Keynesians believe market are unstable. So that is that. So, for example, government must step in during recession. That is how these Keynesians believe. So that is that. Then we have a coincident indicators 1.24. Coincident indicators. So as you go through all this, you can see now the correct answer there is A. Change at the same time with economic activities. Change at the same time with economic activity. So that is that. So A is correct. Opportunity cost 1.25. Opportunity cost. So as we go through all this, you can see the correct answer there is G. That is the value of the next best goods that is given up. So that is opportunity cost. We are talking about the value of the next best alternative given up. For example, choosing to study instead of working. So that is that. The results will be the loss of income. So that is what I'm talking about the opportunity cost. So now we are saying G is the correct answer. The correct answer there is G for opportunity cost. So we have open economy, 1.26. As we can see there under open economy, we can see now the correct answer is C. Trade with other countries. So the correct answer there is C. So hope we are together, and then let us move on to 1.3. Let us move on to 1.3. So here we are on 1.3. So 1.3 is all about concepts now, because it says give one term for each of the following descriptions. Write only the term next to the question number 1.31 to 1.34 in the answer book. Abbreviations, acronyms, and examples will not be accepted. So that is that. So 1.31, goods used to produce other goods. Goods used to produce other goods. So that is capital goods. That is capital goods. Capital goods, those are goods used to produce other goods. For example, machine is in a factory. So that is that. 1.32, study of the role of money and banking in the economy. So the study of the role of money and banking in the economy. So that is money economics. That is money economics. So that is money economics. So money economics, like we are saying, it's money economics. So money economics, it's all about study of money, inflation, interest rates. For example, how interest rates affect spending. So hope we are together on that. Also, we have change before the economic activities, 1.33. Change before the economic activities. So there we are to give one term, that is leading indicator. Leading indicators. That is the term, leading indicators. So that is indicators that predict future economics activity. For example, increase in new businesses. Increase in new businesses. So that is that you're talking about indicators that predict future economic activities. That is that. Addition of money in the economy. addition of money in the economy, that is injections. These are injections. That is when we are talking about money entering the economy. Money entering the economy. For example, increase in new business. It means money is going to enter into the economy. So that is that. So let us move on to section B. Let us move on to section B. So let us be on section B. So here we are on section B. As it says, answer any one of the questions in this section in the answer book. But like I said, we are going to attend all the questions in this section. So question 2 is all about macroeconomics. Macroeconomics. So you have to get 40 marks for this question and you have to just spend 30 minutes to write this question. So now let us attend to this question as it says, answer the following 2.1. Answer the following questions. Name 2 factors to consider when choosing a career. 2.12, what are the difficulties faced by social sciences? So let us attend to the questions. Let us attend to questions. Here are my questions. Here are my answers, sorry. Here are the answers for that question. So as you remember very well, it was to say, the question was, name 2 factors to consider when choosing the career. So we have risk, interest, financial implications, and any other correct relevant responses. But with risk, as it is one of the factors to consider when you choose a career, is that risk is that some jobs are unstable. So you must know that some jobs are stable. For example, freelance work. So that is a very important factor that you have to put into consideration when you choose a career because some jobs are very unstable. Interested. With interest, you perform better in what you enjoy. So it's one of the factors that you have to put into consideration when you choose a career. Do you have interest in that? So that is that. Also, financial implications. Some careers pay more. So some careers pay more. That is what we're talking about, financial implications as one of the factors that we have to consider when you choose what a career. Then the other question 2.12 was, what are the difficulties faced by social sciences? So difficulty is that human nature is not predictable. So human behavior is unpredictable. So that is that. For example, people react differently to price increases. So this is one of the difficulties that is faced by social sciences because it is very difficult that you can predict human. That is why it says difficulty is that human nature is not predictable. Hope you're together on that. So now let us go to question 2.2. Let us attend to question 2.2. 2.2 is about study the graph below and answer the questions that follow. So we are to study what? We are to study the graph for us to answer the questions that follows. So here is our graph that we are to study. As it says, study the graph below and answer the questions that follow. It's about careers in economics. Careers in economics. As you can see now, if you go through this, you can see we have a consultancy, which is 17%. We have analytics. We have product management. We have IT, finance, and that is that. So now let us attend to the questions, basing ourselves on that graph that was given. So the first question says, identify from the graph one career in economics. Identify from the graph one career in economics. That is that. We are to identify from the graph one career in economics. And if we come back to our graph, we can be able to see that we have analytics, we have project management, we have IT finances. All those are careers in economics. So those are the careers in economics. So that is that. We know very well that economics offer various careers. So the question wants us to just identify only, only one. So that is that. If you come to our questions, you can see here our answers. You can talk of analytics, you can consultancy, IT management, finance, all of them can be identified from our graph. They are there. So now let us go to another question, 2.22. Name any other career in the field of economics. So we attend to that 2.22. So name any other career in the field of economics. We can see, okay, we have central banker, we have international trade specialist. Um, so as you know, when you talk of central banker, we're talking about it controls money, supply, and that is that. So now let us attend to 2.23. 2.23 is about briefly describe the term career. Briefly describe the term career. Then we go to our answers there. As you can see here, career refers to experience, roles, and positions that individuals undertake to achieve their professional goals. That is career definition. It's a long-term work journey. It's a long-term work journey. For example, becoming an economist over time. That is what the statements mean when you talk of what? Career. So that is that. Now let us go to 1.24. 2.24, sorry. Why is economics regarded as social science? Why is economics regarded as social science? So quickly go to our answers there. Here we are, as it says, why economics are regarded as social science. It is because economics studies about human behavior. So it studies about human behavior. For example, how people spend money and stuff. So that is that. So now let us attend to another question. 2.25. What are the effects of not having a career? What are the effects of not having a career? So now we come to our answers. Here are our answers for that question 2.25. What are the effects of not having a career? People without career can have limited income potential to satisfy their needs and wants. So there we are talking about a limited income, cannot meet needs. For example, struggling to afford food. So that is that. It reduces job security in their lives. So that is that, as we were saying, no stable employment. So you find that you only having what? A temporary work only. So that is that. So now let us go to question 2.3. Let us attend to 2.3. 2.3. So here we are on our 2.3. Here is our 2.3. As it reads as follows, read the extract below and answer the questions that follow. So, economics as a social science. It says economics is concerned with studying and influencing the economy. Politics is the theory and practice of influencing people through the exercise of power, for example, government. In theory, economics could be non-political. An ideal economist should ignore any political bias or prejudice to give neutral, unbiased information and recommendations on how to improve the economic performance of the country. So now we are to answer the questions now. As it says, identify from the extract factor of economics is concerned about. Factor of economics is concerned about. So now we come to our answers. 2.3. As it was said, identify from the extract factor of economics is concerned about. You can see that is studying and influencing the economy. Studying and influencing economy. So concern of economics. The concern of economics, it focuses on economy and decision making. For example, how resources are used and stuff like that. So that is that. Now let us attend to 2.32. 2.232 is that name any subject that is related to economics. Name any subject that is related to economics. So you know very well that the subject that is related to economics, it can be accounting, mathematics. Those are related subjects, because you know accounting tracks money, economics, mathematics used for calculations. So that is that. So as we can just go to our answers on 2.3, you can see that it's accounting as well as mathematics. So that is that. Now we go to 2.33. 2.33. Briefly describe the term economics. So we know economics definition is all about study of scarce resource and unlimited ones. So let us go to our given answers. 2.33. So here it is, as it says, economics is the study of how individual business and other organizations choose to use scarce resources. Choose to use scarce resources to satisfy needs and wants. So it is a study of scarce resources and unlimited ones. So, for example, choosing between buying food or clothes. So that is that. Now let us go to question 2.34. Explain the importance of economics. Explain the importance of economics. Now we want to know the importance of economics. So that is that. We know that the importance of economics is about decision making, which helps to choose wisely. For example, budgeting income. We can talk of resource distribution, allocating resources. For example, government spending on hospitals. We can talk of efficiency as one of the importance of economics, whereby you avoid waste. For example, using electricity wisely. So that is that. So let us go straight to our answers and then try to add. No. So here it is. It provides information to make informed decisions. Like we have said, it's about decision making. It's about decision making. So that is the importance of the economics, that you're going to make those informed decision. It helps distribution of resources, like I've said, that is resource distribution, allocating resources. So you can be able to allocate resources, allocating resources. Allocating resources, like I've said, government spending on hospitals, that is that. Helps in achieving social efficiency. So here we're talking about what? Efficiency, whereby you're going to avoid waste. You're going to avoid waste. You're going to avoid waste, like I've said, using electricity wisely. That is because of the importance of economics, whereby there is going to be efficiency. Gives forecast for economy. So here we're talking about what? Forecasting. You predict future trends. Predict future trends. predict future trends. So that is that. For example, predicting inflation also helps in understand consumer behavior, understanding the behavior of the consumer, why people buy more during the sales. So that is that. So now let us attend to 2.35. Let us go to 2.35. Here we are on 2.35. How can economic models be used in economic theories? How can economic models be used in economic theories? So you're talking about economic models, simplified representation of reality. That is that. So you're talking of uses. You explain situations, you predict the outcomes. That is that, for example, supply and demand graph. That is economic models, where we are saying it simplified the representation of reality. So let us there and go to the answers. Here we are on economic model. So as we say, these are models used to explain what is happening in a particular situation and predict what is going to happen next. So that is what you've said when you're saying it simplifies the representation of what reality. So also it says making theories more concrete in a verbal or mathematical description. So that is that. So now let us attend to question 2.4. Let us be on 2.4. So 2.4 is about tabulating the difference between free and economic goods. Free and economic goods. So we are to make a tabulation on those. So economic goods, those are the scarce, and those are the goods that are to have a price, that show wealth, that have value. For example, you can talk about cars, can talk about houses. But with free goods now, we're talking about abundant. There are no price, no wealth indication, but just only useful. They are useful. For example, you talk of air, we can talk of sunlight. We'll be together on that. So we can come to our answers and then you just say them. So here we are saying the economic goods, they are scarce. They are scarce. Like we have said, they have exchange value and utility. So meaning to say they have price. Possession indicate wealth. So they show wealth, the economic goods. Also, they command price like I said. So the example air, sunshine, sea, water, rain. So that these are economic goods. Free good, they are plentiful, they have no exchange value, but utility possession does not indicate they do not have command price. So here these are for economic goods. The economic goods, these are economic goods. Economic goods are scarce, like we have said. They have exchange value and utility. So what is incorrect here is the examples. They just made a vice versa. The examples for free good, air, you can talk of sunlight, like you can see. You can talk of sunlight, you can talk of sea, and the other ones. But for economic goods, that's when you can talk about cars, houses. So the problem was the examples were incorrect. So the correct examples are these ones. So that is that. So now let us go to question 2.5. Question 2.5, we said analyze the four elements of economics. Analyze the four elements of economics. Elements of economics. You know very well that we're talking about scarcity, we're talking about choice, we're talking about efficiency, we're talking about equity. So with scarcity, you know, we're talking about limited resources versus unlimited. For example, limited water supply. We can talk of choice, must choose due to scarcity. For example, buying food instead of clothes. We can talk of efficiency, using resources without waste. For example, saving electricity. Equity, that's when we can talk about fair distribution. Example, equal access to educations. So these are four elements of economics. So we can just go through our answers and see. So here are four elements of economics. These are our four elements of economics. Four elements of economics. So we have talked about scarcity. Like it says, we live in a world of scarce resources. So there is no endless supply of resources that nature provides, such as land, minerals, fish, and energy. So meaning we're talking about limited resources that this is unlimited ones. So that is that. Then we have choice. People must make choices because their wants are unlimited to compare to the means to satisfy them. So must choose due to scarcity. That is that. People's wants are unlimited, while means to satisfy them are only limited. That is that. Now we have efficiency. With efficiency, its ability to achieve an end goal with little or no waste. So using resources without waste. That is that. So consent with how well resources, e.g. money, time, and etc. are used to produce an end result. Then we have equity. Like I said, equity is about fair distribution. So equity means being fair and just, meaning that one should not only be thinking of one's own needs and interests, but those of others too. So that is that. So now we are to move to question 3. Now we are to attend to question 3. So here is our question 3. Here we are on our question 3. So we are on question 3, that is macroeconomics. 3.1, answer the following questions. 3.11, name any two branches of economics. So branches of economics, that is when you're talking about microeconomics. That is when you're talking about individual decisions. And the other one is macroeconomics. That is when you're talking about whole economic, whole economic. So that is that. And you know very well when you're talking about microeconomics, like I've said, it's individual decisions. That is, for example, when you're talking about consumer buying behavior. But with macroeconomics, whole economy, that is when you're talking about inflation. So that is that. So we can go to our answers and then you see what we are talking about. So these answers for question 3.1, two branches, like you can talk of macro, like we've said. Also, you can talk about monetary economics and development economics. So these are our answers for branches of economics. So these are answers for branches of economics. So now let us go to another question, which is 3.12. As it says, how can the environment be protected? How can the environment be protected? So here we're talking about what? Protecting what? Environment. You're talking about protecting environment. We're talking about protecting environment. So the environment can be protected through, for example, for you to protect the environment, you can recycle waste, let's say. So environment can be protected by preventing pollution, promoting conservation, sustainable development. That's how you can protect what an environment. So that is that. As you can see here, are our answers for that question. Here we are saying preventing pollution, like we've said, and ecological degradation. You can also promote conservation. You can as well try by all means by securing ecologically sustainable development. So that is in short how you can protect the environment. You do what? You prevent pollution. You prevent pollution. You promote conversation. You promote conversation, or you can now do what you call sustainable development. So hope we are together on that. Like I've said, for example, you can do what recycle waste. I've said it that, for example, you can do what recycling of waste, recycling of waste, recycling waste. That is how you can protect what the environment. So now let us attend to another question, which is 3.3, 3.2, sorry. So 3.2 is about studying the picture, which is this picture. As it says, study the picture below and answer the questions that follow. So we have this picture whereby we have unlimited ones, limited resources, and then we have scarcity, and then we have choice. So this is the picture that you're going to study and then answer the questions. As it says, scarcity society does not have enough resources to fill all desires, to fill all desires. So now let us attend to question 3.21. It says, identify the cause of scarcity from the above picture. What causes this scarcity from the above picture? Unlimited ones and limited resources. These are our answers. Are this causes what? The scarcity. This causes what? Scarcity. As you can see here, it symbol shows that scarcity is caused by unlimited ones as well as limited resources. Hope we are together on that. So even on our answers, like I will always show you answers. Here they are. Remember, we were asked to identify the cause of scarcity from the above picture. Here they are, limited and unlimited uh, what? Resources. So now let us move on to 3.22. Let us move on to 3.22. 3.22 says, name one type of scarcity. Scarcity. Name one type of scarcity. So we are to name type of scarcity. So we have a relative scarcity. We have relative. We have also absolute scarcity. So with relative scarcity, we are talking about resources exist but limited. But absolute resources do not exist. So hope we are together on that. So I've said it's what? Absolute as well as relative scarcity. With relative, I'm saying resources are existing, but they are limited. They are very limited. But with absolute, resources do not exist at all. Hope we are together on that. So here they are on our answers. Here we have relative scarcity and we have absolute scarcity. With this one, like I said, relative scarcity, I am saying resources exist. Resources do exist. Resources exist, but limited. But limited. But with absolute, resources do not exist at all. Resources do not exist. So these are the types of scarcity, though we were asked to mention one. So now let us attend to 3.23. Briefly describe the term production. Briefly describe the term production. So production is turning raw materials into goods. When you talk of production, you turn raw materials into useful good, into useful good. So, for example, you turn wood as a raw material to furniture. That's what we call a production. That is a production, whereby you're going to convert raw materials into finished product. So that is that. If you want to go to our answers, you will just say it as that. So here is production, the term production where you are to describe process of transforming raw materials into finished good. Like I've said, you are going to turn raw materials into useful product, into a good, wood to furniture. Hope you're together on that. Let us go to 3.24. 3.24 is that you are to explain the importance of capital goods. Importance of capital goods. Capital goods are used to produce other goods. Like we've said, they are used to produce other goods. Get me straight. Capital, like machines that are going to be used in the production. Capital goods are used to produce other goods. Machines that produce other products. That's capital goods that we are talking about. Hope you are together with people. Like you see here, the importance of capital goods. Capital goods are important because they are used in the production of other goods. So hope you are to get 3.25. Why does scarcity force consumers to make choices? So here we're talking about scarcity and choice. Because the question says, why does scarcity force consumers to make choices? Because they cannot satisfy all wants. They cannot satisfy all wants. That is why they are forced to make choices. So they must choose. For example, spend money on food or transport. So you must choose between transport or food. It's because of what? Scarcity. So the scarcity forces consumers to make choices. So that is that, good people. So you can see our answers here. Here, why does scarcity force consumers to make choices? Scarcity means that consumers want more than is available before scarcity requires choice. Consumers must choose which of their design they will satisfy or which will leave unsatisfied. Consumers forced to make choice. That is all what we can say about scarcity. You are forced because you cannot satisfy all wants. So you must choose. That is that. You are forced to choose. Now let us go to 3.3. So here we are on 3.3, whereby we are to read the table below and we are to answer the questions that follow. So on the table, you can see we have consumption expenditure by the households. So we have these consumer goods and with different years because we have 2023 as well as 2024. We have consumer goods whereby we are having durable, semi-durable, non-durable services, and then we are to have as well a total. That is 3.3. So the question says, identify the type of consumer goods where households spend the most in 2024. So here is our 2024. So we are asked to identify type of consumer goods where households spend the most in 2024. So you see non-durable goods. Non-durable goods. As you can see, in 2024 is 259,264. So you can see that it's a type of consumer goods where the household spend more. That is non-durable goods. So let us attend to our answers. So you can see here it's non-durable goods. Those goods that are used quickly. Example, you can talk about food. So consumers spend more on those ones. That is that. So now let us go to another question. So this is non-durable goods, like we have said. That question is non-durable goods. You can see even the amount is more than these other amounts in 2024. So that is that. Name one example of durable goods. Now, example of durable goods, not none. Durable goods. Example of durable goods. We're talking about those goods that last long. When you talk of durable goods, we're talking about those goods that last long. So the example, you can talk of a furniture. A furniture, the furnitures last long. It's not like food that you can buy time and again. So that is that. So now let us go to our answers and then we can see the given one. Car is one of the durable goods as it lasts long, as well as furniture. So that is that. So now let us attend to another question. 3.33. Briefly describe the term non-durable goods. Briefly describe the term non-durable goods. Non-durable goods definition, that is why is used once and quickly. These are goods that are used once and quickly. For example, you can talk of bread. Those are non-durable goods. They are just used once and then quickly. So that is that. So let us attend to the given one. Non-durable goods are goods that are consumed once. So like I've said, we can talk of bread as an example. So they are just being used quickly. So that is that. Used once or quickly. Those are non-durable goods that are used once, consumed once, or quickly. So that is that. So now let us go to 3.34. Why do consumers spend more on non-durable goods? Why more spending on non-durable goods? Those are daily needs. It's because these are the daily needs. They are daily needs. Example, buying groceries daily. So that is why consumers have to spend more on non-durable goods. So that is that. So why do consumers spend more on non-durable goods? Because they cater for daily needs and wants and making them necessary for consumers. Like I've said, you can talk of buying a grocery, for example. There is no way you are to buy it because it's a daily need. That is why we buy more on non-durable goods than durable goods. Good. Let's go to 3.35. 3.35 says calculate the total consumption expenditure by households in 2023. 2023, so not 2024. So in 2023, we are asked to calculate the total consumption expenditure. So let us go to there in 2023 expenditures, and then we calculate the total of that. So total consumption calculation, then we are going to add all values. You can see we have 2,034,920. As you can see, there it is. We have 2,142,021. We have 3,512,005. We also have 145,230. So you add all those, you are going to get 7,834,176. So this is our total consumption in 2023. So that is that. So you add all these together. Add all these together to get the total. So even on our answers is there. So here we are 7,834,176. So that is that. So now let us go to 3.4. 3.4 is about briefly explain two main approaches to economics. Two main approaches to economics. So we can talk of a monetarist. So we can talk of monetarist. We can talk of a Keynesian. So those are two main approaches to economics. Like I've said, you can talk of monetarist. You know, we're talking about wherever we're saying economy is stable. So this one we know very well. We're saying economy is stable. Also, we are saying less government control under this one. Less government control. Less government control. That is, for example, market controls prices. So another approach can be the one that we know that we said is a Keynesian. So we can talk about a Keynesian. So Keynesian, this is where we're saying economy is unstable. Here we are saying economy, they believe that economy is unstable. And now government must create what? Jobs. Government must interfere. Here government must intervene. Government must intervene. So meaning, for example, government must create jobs because the Keynesian approach says economy is unstable. So government must now chip in. But with this one, the monetarist, that is where we are saying with a monetarist, economy is stable, less government control, it means market control prices. So that is that. That is those two approaches. These are those two approaches. So we can now just go straight to them and then see. So here we have briefly explained two main approaches to economics. We have monetarist approach. So the monetarist approach sees the economy as follows. The free market economy is inherently stable, like we have said. With this one, we said that the economy is stable. We have said the economy is stable under this. It can be achieved, it can achieve desired microeconomic objectives effectively. External factors cause variations in the economy. This approach restricts government interfering to a minimum. That is that. So we have this one, a Keynesian approach, like we have said with this one, they believe that the government is unstable. As it says, the Keynesian approach sees the government as false. The free market economy is inherently unstable. It cannot achieve desired macroeconomic objectives. It cannot achieve desired macroeconomic objectives effective. So they believe that markets react slowly to change in equilibrium. So active government intervention is sometimes the best method to get into the economy into equilibrium, to get the economy into equilibrium. So that is that. Now let us move on to 3.5. So here we are on 3.5. 3.5 is as follows. How can secondary sector be used to boost economy? Here we're talking about secondary sector. How can it be used to boost economy? So that this produces goods. For it to boost economy, that's when they produce goods. They have to create jobs, boost exports, pay taxes. That is the only way they can boost economy. As we are saying, they must produce goods. If there is a production, the economy of the country is going to be boosted. So they must produce goods. They must make sure that they create jobs. There must be an employment. They must create jobs. Also, boost exports. Boost exports. So we must export so that we can have income. That will also boost the economy. Also, the secondary sectors must pay taxes. So these are the answers for 3.5. So we can go to our answers. So here they are, as it says, how can the secondary sector be used to boost the economy? So the secondary sector can be used to boost the economy by manufacturing, producing goods and services that satisfy the needs and wants. So that is why we have said they must produce what? Goods. Create local employment for the country. That is when they do what? That is when they create jobs. Increase industry that may diversify local production. That is that. They must increase industry that is going to diversify the local production. They must produce in large quantities that will be exported to other countries, foreign exchange. So meaning we're talking about they must boost what? The exports. Also contribute corporate tax to the government that can be used to pay for public goods. Like I've said, they must pay taxes. So that is that. So that is that under that question. So this is the end of this presentation. Thank you very much for your time, and please returns make use of this presentation as it is very helpful for you to prepare fully for the term 2 that you are going to write. So this is paper 1, as the paper 2 presentation is still going to come. Also, the section C of this paper 1 is going to follow after this presentation. Thank you very much. Make sure that you share with others, and please don't forget to hit the subscription button. I thank you.